Egyptian government and the Islamic Development Bank for an excellent opening session in which we think important messages have been promulgated, important and reassuring messages. And the purpose of this panel is indeed to go a little bit more into depth to discuss some of the policy and legislative issues which are relevant for attracting FDI, for attracting also regional investment, but also to support local investment, national investors, and also traders and exporters and importers. So that's really the purpose of this panel, to look into some concrete policy measures. And we have an excellent round of panelists, which I will introduce in a second. The overall objective of this panel in particular is to develop recommendations which then should be presented at the Deauville Partnership Investment Conference on the 16th of September in London. The Minister of Investment referred to that event, but also the UK High Representative referred to that event. That's the important G8 Deauville Partnership Investment Conference in September. And it basically has three objectives: to showcase foreign direct investment opportunities. The Prime Minister, His Excellency, was talking, I think, very pointedly about the opportunities which are also here for investors in Egypt. And secondly, to facilitate investment networking, but also to discuss and to have a dialogue about policy barriers for investors. And the Minister, His Excellency, for Investment, but also the Prime Minister later on mentioned a number of them, and even some concrete actions which are being taken by the government. That's really what we want to discuss here today, and I'm very pleased and honored to introduce an excellent panel. To my left immediately is Ms. Naveen El-Shafi, the Vice Chairman of Gafi. Many of you know her. She is involved in many investment projects here and in the policy advocacy promulgated by Gafi very successfully since a number of years. Naveen, we are really pleased to have you here.
Thank you.
I have on my right Gamal Negm, who is the Deputy Director of the Central Bank of Egypt. We are very honored to have the Central Bank here with us. We knew it was difficult for you, but it's particularly important that you have that here. We will have a couple of tricky questions for you, I'm afraid, but that's part of the exercise. I'm very pleased also to introduce His Excellency and CEO of the Islamic Corporation for the Insurance of Investment and Export Credit, Dr. Abdul Tahal. Mr. Tahal, we know each other since a number of years, and obviously the question of risk mitigation, political risk insurance, but also commercial risk insurance is high on the agenda in any investment or export project. I'm also very pleased and honored to introduce the CEO of the International Islamic Trade Financing Corporation, Dr. Walid Al-Wahabi. Trade and trade financing, the Prime Minister mentioned it, is a key collateral to investment and the exporting and importing issues which we can discuss, and the financing aspect of trade will be an important issue. I'm very pleased to then also welcome Mr. Philip Tervoort, the Director of the Egyptian Country Office of the EBRD, that's the European Bank for Reconstruction and Development, a bank which has been set up in the early 90s to support the transition process in Eastern Europe and the former Soviet Union states, and which has a very successful track record on particularly promoting private sector development, promoting small and medium enterprises. And I think one of the, as was mentioned before, one of the achievements of the G8 Deauville Partnership is actually to have the mandate of the EBRD extended to this region, and the country office here in Egypt is a good start for that. And finally, also Mr. Sherif Hamdi, he's a good colleague and friend over some years, who is a regional program manager for the IFC, the International Finance Corporation, part of the World Bank Group, who again is promoting private businesses, private enterprises since a number of years here in Egypt. And we are keen also to hear from him what the current projects are. Ladies and gentlemen, I think the Prime Minister made it in a very nicely way, very clear that what we are looking here for is after the revolution of the 25th of January, we are looking here for the new business model. We're looking here for the new business case for investors and traders to come to Egypt and invest. And since we don't have a private sector representative on the panel, allow me to quickly play that role of such a private sector representative who would probably ask himself that before the events of 2011 and mainly before the financial crisis of 2008, there was a compelling business case to come and invest in Egypt. The Prime Minister mentioned affordable labor, subsidized energy, affordable energy, but also the opportunities for higher returns on investment than in other markets, than in more mature markets, but also in other emerging markets, which kind of sort of compensated for potential risks and obstacles. We are looking for, and we heard that this morning very much, we're looking for a new business model, and it has to be one where the government and the private sector is in a strong partnership, in a strong public-private partnership. The government is very interested, on the one hand, to create jobs. You heard the ambitious, but I think it's important to set ambitious targets. The ambitious target of His Excellency, the Minister of Investment, saying 1.2 million jobs created per year annually in the future, as against only 600,000 before. That is an ambitious target, and that's one thing, what the government is looking for. For the business people and investors here in the room, return on investment is important. You have to defend your project here in Egypt with your board, with your shareholders, with your equity holders. And therefore, we have to think about what is the new business case to make business here in Egypt. And the obstacles were mentioned. I just want to list a few of them. Obviously, the currency instability and the question of how do we access foreign currency in particular, and we will talk about this in a minute. But also the macro fundamentals with modest growth rates and strong fiscal restraints, higher labor costs and higher energy costs once the subsidies are being phased out. Contract enforcement issues payment issues are an important point. And then, of course, we have a series of court rulings. They are very media-sized, and you all know about them. And any investor involved in previous privatization transactions or in land sales or in concessions, even license for mining, ask himself the question at the moment, is my contract with the government stable, will be challenged at some stage, and what can we do about it? Now, that's the question, what can we do about it? And I'm very pleased to turn to Naveen. Naveen, what in your opinion is the new business case for investing in Egypt? And what is the government, and that's what really the panel is about, what's the government doing in terms of measures to address obstacles, but also to show opportunities?
Okay. Thank you, Alex. I'm very pleased to be here today. I think we've been through a lot of panels. Maybe today is a bit different because of some of the circumstances that we're going through. But I think we would all agree that the solid case for Egypt, for investing in Egypt and having Egypt as an investment destination stand valid today. Whether we talk about the solid fundamentals, you mentioned geographical location, attractive cost of factors of production, critical market size. I think all of that hasn't changed. So yes, within the solid fundamentals, I would say it's there. The access to markets, to foreign markets. Egypt is party to a number of foreign trade agreements which enable any company operating in Egypt to have access to significant markets outside. So I think we would have to agree on that. Obviously, during the past 2 years, we've faced certain challenges, which I think are all well known to everyone with us, and this is basically the starting point that when His Excellency the Minister outlined today the three or four steps which the government is trying to carry out, and our starting point was really looking at the challenges, and basically they are unemployment, the rising rate of unemployment, which is I think our number one priority as a government to address. Obviously, the gross capital formation percentages are not as high or as expected to generate the growth rates that we would aspire to see in the future. So here, there has to be concentration on encouraging private investment, because obviously, as we heard, the public investment share or contribution over the next very short term will not be as high as historical levels. We've already heard a 75-25% split. Historically, that was more balanced. So I think there is a very strong recognition that there has to be contribution from the private sector. And that's basically what the pillars of the government reform program is built on. Obviously, as the Investment Authority or the Ministry of Investment, we've worked around four main things. The first thing was resolving some of the disputes, and I think that some names were actually listed this morning. But what's more important is the legislative framework. And that occurred in January of 2012, where there was an amendment of the investment law enabling amicable dispute settlement between investors. And I think this was the starting point that enabled companies to enter into that sort of dispute resolution. Recently, what was mentioned is the proposal to go forth with a legislative change. I think it's been approved at the Cabinet and is awaiting Shura Council approval, which would allow for more easing and facilitation in that respect. And that addresses the issue of the privatization reversal court cases, which I think we're all familiar with. On a second level, we're also probably going to be seeing some legislative change in terms of the tenders and auctions law, which is Law 89. And again, that is still awaiting approval at the Shura Council. That will enable government entities to be more flexible in procurement. And I think that's been one of the areas which has made or has slowed down some of the projects and procurement of certain big projects to the private sector. So I expect that there should be a certain flexibility or liberalization in that area. In terms of procedural reform, I think we've talked about the one-stop shop. We've talked about easing some of the business establishment procedures. We're also expanding our one-stop shop network. I'd like to add here that we're having in conjunction with the World Bank, we're doing a sub-national report exercise which covers a number of governorates. And I think that's very important, because we haven't really talked about decentralization, and I think that's key. Unless we are able to sort of have these reforms and these procedural changes carried out at the very lower levels and decentralized levels, I think we'd still have some obstacles and bottlenecks. In terms of licensing, I think it was mentioned that we would try to activate what is already in the investment law to allow the investment authority to issue temporary licensing, and that would enable us to somehow just undergo some improvement in our licensing procedures, which of course are quite strenuous at present. And lastly, I think it was mentioned incentives. There are a set of incentives which are to be introduced on a regional as well as a sectoral level, and maybe we can discuss that maybe at a later stage. Thank you.
Thank you, Naveen. That was an excellent overview, and thank you also for being brief. Our plan is to do 2 rounds like this, then really engage with you in questions, and then have a final round. Just to throw that in here. I think the points you made on the one-stop shop were important. That was an important improvement introduced by Gafi in the last decade. But the Prime Minister also challenged it a little bit by saying that registering a business is one thing, but then getting the operational licenses may take actually 1.5 years, which is another thing. So we come back to that. I also want to underline the efforts you are conducting with the different Gavi satellites in the different governorates, because doing business is local at the end of the day. You need to interact with the local authorities as much as here in the center in Cairo. Back to the center of Cairo, Mr. Gamal. The Central Bank of Egypt has a very crucial but also a very difficult balancing act to do, I think, since a number of years. This is, on the one hand, trying to stabilize the Egyptian pounds and the currency reserves of the countries, and also, to put it in the open, to fight against illicit transfers. At the same time, investors want to have access to capital. They want to return profits. That's one of the key points for an investor. And also, they want to have access to foreign currency in order to import, in order to pay their bills. How do you manage this balancing act?
Yes. Yes.
It's certainly a difficult task.
Yes.
Please
before
go ahead.
To start and
Yeah.
before to answer your
Yeah.
questions, I'd like just to brief
Yeah.
from where we have come. I mean, the banking sector. Let's say that in 2003 and 2004, since 2003 and 2004, we started two reform program. The first phase of the reform was during the period from 2004 to 2008. At that time, we were focusing on the non-performing loans because it was a hot issue at that time, and restructuring of state-owned banks, and enhance the banking supervision and privatization and consolidation of the market sector. The result of the phase one of reform is the number of banks reduced from 57 to 39 banks. At that time, I would like just to mention two figures. At that time, the total of non-performing loans was 110 billion Egyptian pounds. And at that time, the owner's equities was 32 billion. And the provisioning gap was more than 55 billion Egyptian pounds. And after that, we launched a new process for non-performing loans in order to identify the reality of the non-performing loan and the real size of non-performing loan within the banking sector. Reform 2 was focused, which is 2009-2011, was focusing on the implementing Basel II, and the most updated version due of Basel in place, and access to finance in order to enhance the SMEs business through enhancing the industrial capacity of these companies. And the last item was the corporate governance. Based on that and the result of the two reform programs, I will mention just 5 ratio of the financial soundness indicator of the banking sectors. For example, the capital adequacy ratio we are talking about in December, we're talking about almost 15.9. It's real capital. And for Tier 1 capital, we are talking about 13.2. Leverage ratio is almost 7. Liquidity ratio is 52%. Loan to deposit ratio, it's almost 50%. The net profit of the banking sector as of December is 13.2 billion versus 3.2 billion as of December 2004. More and above, we, as I mentioned, Basel II, all banks, private banks that have their fiscal year ended by December, implemented Basel II and passed Basel II, and banks with fiscal year end June, it's June 13, 2003, it will be implemented Basel. This is a post-revolution challenge, liquidity pressures, reserve, and what we did in order to ease the market, for example, for liquidity, we reduced the mandatory reserve requirement, which it was 14%. We reduced it to 10% in order to avail liquidity, introduced the CBE new auction system, and we introduced a new mechanism for repatriation. I think by doing so, that we were trying to ease the market as much as we can, and we exempting genuine trade finance transaction for investors and individuals from transfer restrictions, which was very clear, and no restrictions at all for foreigners in order to transfer their amount across border. Conducting stress testing on individual banks, and I would like just to thank Reform for that item specifically, because actually, as you see around us, since the international crisis and Europe banking crisis, we have a strong bank. As I'm always saying, it's the most easiest part to set strategy, but the core, how to implement it. And the two reform send two important, very important messages, which is commitment to do, which we did, and implementation capacity. We have the implementation capacity to conduct and to implement our two phases properly. Therefore, the banks have the liquidity. Yes, we are managing our reserve properly. We are trying to help the banks in order to serve the requirements and the needs, and we are monitoring the backlog on a daily basis, the backlog transaction within the banking sector on a daily basis. Thank you.
Thank you very much. That was an excellent overview, and thanks for making these points. We come back to in the next round to the very specific questions of foreign currency and access to foreign currency. I'm very pleased now to also turn to Dr. Taha from the ICIEC. That's a long abbreviation, but it stands for a really important mechanism. And I think it's fair to say that in all Deauville partnership countries, obviously, since a number of years now, the issue of guarantees from state bodies or insurances from the private sector for investment transactions, but also for trade transactions, is again very important. Actually, the exposure of, for example, the World Bank, daughter MIGA, of guarantees in the region has gone up 200-300%. And the same is true for the G8 export credit and investment guarantee agencies, which are covering a lot of their investors now in countries like Egypt, Libya, Tunisia, and Jordan and Morocco. So it's an important instrument. It's meant to be for phases like that. I worked before in the German industry, and I can tell you that the German insurance guarantee system helped companies to stay in Russia, for example, during the ruble crisis, or to stay in Asia during the Asian financial crisis. And now important institutions like Dr. Taha are representing, playing the same role in a way, and playing the same role here in this very important transition period. Dr. Taha, what are sort of the risk perceptions you are working with when you work with investors in currently in wanting to invest in Egypt, and what are the instruments your institution, your organization is proposing? Thank you.
Thank you very much, Bohmer, and thank you for the introduction. And our the abbreviation ISIC stands for the Islamic Corporation for the Insurance of Investment and Export Credit. We are part of the Islamic Development Bank group, and we deal with political risk, or sometimes called country risk. And as everybody knows, it's really a matter of perception. Before the revolution, the country risk of Egypt, investors did not really perceive that there is an issue. And therefore, we had very little demand for covering investment in Egypt. During the last 20 years, we only covered one or two projects. And our role was more in supporting Egyptian investors and Egyptian trade going out into our member countries in Africa and Asia. Usually, the standard sort of classical areas where political risk insurers get involved, there are three fundamental areas. First of all, the expropriation, nationalization, and confiscation by the government of the assets of the investor. Second is the foreign exchange transfer risk, the inability of the investor to be able to repatriate his investment in convertible currencies, and war and civil disturbances. However, some investors may choose to insure breach of contract by the government, and also lately some insurers, especially MIGA and ourselves, we can insure the direct sovereign obligation, financial sovereign obligation. This we do. Who are the providers of political risk? I think there are three types of providers. There are the multilaterals. The biggest, of course, is MIGA, which is the Multilateral Investment Guarantee Agency of the World Bank. Then there's the ISIC, it's, the the Islamic Corporation, and the Arab Investment Guarantee Corporation. Egypt is a member of all these three organizations, and any one of them, or jointly, we can provide support. And I think the second group is bilateral. As you mentioned, Hermes in Germany, OPIC of the United States, Overseas Private Investment Corporation, COFAS in France, and many, especially European countries and some Asian countries, China, South Korea, Japan, they do provide political risk insurance for their own investors, of course. And finally, there is the private sector. There is a large number of Lloyd's syndicates do provide political risk insurance. There are some also private providers, like Zurich Emerging Markets based in Washington, Sovereign based in Bermuda, and there is very strong cooperation between all these groups. Of course, the multilaterals have the advantage of that the host country is a member of these multilaterals, and therefore have an obligation to be able to honor whatever it commits itself for. So we have the ability to talk to the government and to come back to the government. And more importantly, I think when we are involved in the insurance, this acts as a deterrent sometimes, that the government, knowing that a multilateral MIGA or ISIC or Daman, the Arab Investment Guarantee, is part of the insurance contract, acts as a deterrent and also give us the ability to mediate. And I think this is very important for investors. And this is why now some of the, even when private sector insurance is available, the investor may want to involve one of the multilaterals because it adds this power. The benefits for the investors are clear, of course, because it removes from his shoulders the type of risk that he can't do anything about. And he can take care of whatever commercial risk he faces, but when it comes to, for example, foreign exchange transfer risk or confiscation by the government, his hands are tied. And this is where we come in. Also, it enhances the credit rating of his investment, and this enables him to access international capital markets to be able to raise funds for the project, which is very important. For the host country, of course, it is obvious because the host country will be able to attract investors who otherwise will not come in without being insured either by a multilateral or by private sectors. Our corporation have a number of instruments that investors may be able to use. We have a policy, insurance policy that covers equity. Another insurance policy that will cover financing for an insurance project. But also, as I mentioned, we can also cover the direct credit obligation of the sovereign. When, for example, there's a project that is insured or guaranteed by a Ministry of Finance or the central bank, or in the case of purchases that there is a guarantee from the government, we will be able to counter guarantee or insure those. We also offer a breach of contract, which is really comes in action when there is denial of justice. When, for example, an arbitration award is not honored by the government, or a legal decision is not honored, we comes in and we are able to compensate the investor. Just to give a couple of examples of what we can actually
You can also come back to.
Okay.
But please.
Okay.
You can come.
For example, currently we are processing an application from one of the largest petroleum groups working in Egypt. And our role here really, because this is a huge project of more than $2 billion, is one of the reinsurers to the package. The main insurers come from the private sector. We give an example of in another country where we helped a Turkish investor to set up a steel mill in Algeria, and he needed political risk insurance. We provided that, and without that political risk insurance, he may not have gone into Algeria. We helped some of the Egyptian investors, for example, the OECD group, to have a number of projects in, this is in the screen, in Sudan. This is a turnkey project to provide a electricity grid for a Sudanese province. OECD was able to do it because we insured a credit for 7 years, and because of our intervention, he was able to raise financing from Egyptian banks. The reverse could also happen. Thank you very much.
Thank you so much, Mr. Taha. I think that was important because Dr. Taha also speaks on behalf of a whole industry. You mentioned it. Yeah. There's, of course, his important organization, but there are many others out there. And the breach of contract in particular is a guarantee many investors are asking for right now. And of course, there's a cost which comes to it, but we come back to that. There are fees which have to be paid, and again, the value of these fees has to do with the question what the risk situation and the risk expectation in the country is. I'm very pleased now to move to Dr. Wuhaib from the International Islamic Trade and Finance Corporation, ITFC. Dr. Wuhaib, we have heard the Prime Minister talking about a number of trade agreements and the trade integration as an important, and the need for more regional trade integration as an important addition to investment attraction. Now the numbers speak that only 5%, roughly 5.5% of MENA trade is interregional, and that 5% of total trade of MENA countries is only interregional. So that speaks to that despite many activities like the Greater Arab Free Trade Area, the Agadir process, and other bilateral initiatives amongst the Arab countries, and also the Arab League is working on a customs union, as we know. The regional trade integration has still a number of steps to go, and I'm really pleased to hear what kind of trade financing tools and what kind of approaches the ITFC is providing to help foster exports in the region, but also beyond, obviously.
Thank you. Thank you, Alex. The main products of ITFC is trade finance and technical assistance to support trade, especially the interregional trade. Until now, ITFC, or since January 2008, we approved about $21 billion for all member states. I can say comfortably that 1/3 of it is for the Arab states, and about 80% for intra-trade. So this is one of the tools that's available to encourage intra-trade. It's available for the government, like for Egypt now. Yesterday we signed an agreement to finance oil for $300 million, and by this we are completing, since January 2012, a $1 billion financing for Egypt, and we are continuing increasing our finance for Egypt, because we, as the Prime Minister has said, it is a need, and the need is an opportunity for helping more and for participating. And our cooperation with Egypt particularly increased very rapidly in the past 2 years. So just to give you an example, since starting of trade finance operations in the bank in 1977, until the establishment of ITFC, the IDB group provided about $1.6 billion for Egypt for trade. Since 2008 until now, it is 2.2. In the past 1.5 years, it is $1 billion. So we are increasing, and we are planning to increase more. The strength of this and the beauty of this financing is that it is a syndication, and we are facilitating the financing for the country by this kind of mechanism, and depending, of course, on the AAA rating of IDB Group. Also, the financing, not only for government, it's also for the private sector, either by direct financing, and there are many cases in Egypt who benefited from this, and it's open. Also, we do financing through the banks by lines of financing, and we have many experiences, and the last line was provided for the social fund development for the SMEs, and we are going to increase this kind of financing to support SMEs, either through government agencies or through the banks. So this is one kind of products that ITFC is offering to help promote trade with the whole world, and trade and intra-trade in the region. The other product is technical assistance. We have direct technical assistance through the trade cooperation and promotion program, and we have very special relationship with the FTTC, which is the Foreign Trade Center in Egypt. We have, with this training center, very good programs for the SMEs to enhance their competencies and knowledge about how to do exporting. Also, we have now a special arrangement with the international community to provide more technical assistance for the region, for the Arab region. That is the Aid for Trade. This initiative has been started to be developed since 2009 by the request of the Arab diplomatic missions and in Geneva. And this initiative now is supported by and shared by most of the UN development agencies like International Trade Center, UNDP, UNIDO, UNCTAD. All of them are sitting around one table working with us very closely on the technical level. And on the financial level and the financial support, we got good support from the Arab Summit, Arab Economic Summit. It is one of the initiatives that has been supported in Riyadh last March. And we got generous support from Saudi Arabia, $3 million, from Kuwait, $2 million, from Sweden, about $1.5 million, from ITFC, $1 million, from IDB, $1 million, from UNDP, $1 million. This is the first stage for defining the needs of the countries. And of course, Egypt is a center in the Arab region, and we are working very closely with the officials to define the technical assistance needs and to start with them. And I hope that we can start with Egypt before any country else. And also, I have another hope that the G8 find a way to support this initiative, which is a world initiative to support the Arab states. Thank you.
Thank you so much, Dr. Wahib, and thank you for reducing this very complex issue to a few things. Trade capacity building, export capacity building for SMEs, so that's a big issue and an important issue for Egypt. I know that Sweden, for example, you mentioned it, is also working on an accreditation system on a regional level. So I think there's support, but the G8 countries should probably do more. It's important because many investors tell us that they would like to source locally and create local jobs with enterprises here, but they can often not use the products because they don't fit their standard requirements.